previous videos, we discussed things such as strategies and what to look for when placing an options trade and things like that, just kind of the basic nature. But I realized that we never actually did a video on how to properly build a narrative. Now, at Diamond, what we want to do is we want to actually help you guys become traders. That's the whole goal, right? It's not to just kind of you subscribe to us and then we just blindly say, yeah, above 900 buy calls, below 900 buy puts, above 50 buy calls, below 50 buy puts. That's not helpful because there's no reason behind that. And it's not actually helping you guys try to become traders on your own. And we're not actually giving you reasons behind why we're telling you what we're seeing. You know, more or less, those different services that send out those once a week newsletters, those emails that kind of just say blindly, hey, watch for this level here, watch for this level here, above this buy calls, above this buy puts. They're not actually explaining anything to you guys. And those services like that, I feel lack integrity, and really their whole goal is just kind of take money from you, right? They're probably actually making most of their money from actually the subscriptions rather than trading, whereas we here, all our money is coming from our trading, and then obviously we are trying to help you guys become traders on your own. That's the whole goal, right? So I think the integrity is lost in a lot of those. So what we want to teach you guys is how to properly build your assumption, because in past videos, like I said before, well, we teach you guys strategies and kind of what to look for, volume and things like this, but how can you build a proper narrative, and how do you know when to get into something or when to get out of something or when to just kind of sit out? So that's what we're going to do here. We're just going to pick a random stock that has earnings coming up in a couple weeks, and we picked Microsoft here. So this is going to be a good one to kind of see just overall. We're just going to kind of look at what we I'm going to let you guys know what we look at before we actually make any alerts in here or things like that. And actually, any of this information that you guys want in our Discord, you guys can ask us this for anytime, 24/7. Just put it in our Discord and say, hey, I need the net flows for this. What's the volatility on this? What does this look like? Is there a call skew here? Does this look all right to you? You know what I mean? What if I do a credit spread here? Would I rather spread this out, or should I just buy straight calls and puts here? You guys can ask us that 24/7. That's what we're here for. That's what we're here to help you out, especially if you guys already have a basic assumption. That helps us out tremendously, rather than if there's a stock that we're not seeing or we're looking at it differently, and you guys say, hey, I know you're bullish on this, but I am a little bit bearish to neutral. So what would be a trade that I could place that fits my assumption rather than what you guys are actually seeing on the charts? And then we can help you with that as well. So again, we're going to dig in here to Microsoft. Just overall, what are we looking at here? We have the daily chart up. We're sitting at 367. So Thursday's trading session closed 367.78. Red day on the day. Now, first off, how does Microsoft compare on the day to the SPY? So the SPY had a little bit of a green day, right? Dropped obviously, but more or less was kind of neutral, a little bearish overall. Whereas Microsoft on the day basically just kind of traded down all day. You can see right here on the 30-minute chart, we opened up here right around that 373 mark, little dip, kind of recovered, and then obviously towards the end of the day just kept on going down. So that's number one. We have to keep in mind how it trades with the SPY and with the Qs. Now we know that it's a little bit bearish in here, so we're going to look at our RSI and our volume next. So on the daily here, you can see our RSI is still relatively oversold, but not really. We're at 41. So it's not as oversold as we like. Whereas back here, this would be a spot where we're like, okay, yes, we're going to get long in here, whether that's selling some sort of put spread, buying some calls, what have you. So our RSI is not really where we want it, but let's go look down here at the MACD. I'm sorry, look at the volume first. Volume basically sitting where it was the previous trading session when you had that big drop in here. So you had that gap down, you opened at 380, you had that low of 368, and you closed at 371. So your volume is relatively the same in here, a little bit lower, and you would expect this to be much lower because of the day that we had in here today as compared to, or I'm sorry, the day that we had in there on Thursday compared to that previous day's trading session, but it's more or less the same. So that can tell you something like, hey, okay, it looks like maybe everybody might be gathering on the put side here, perhaps because it's a red day and your volume's the same. And our RSI is basically telling us, it's not quite yet time to get long just yet. And that's just on the daily. We're going to look at our MACD next, and you can see that really it's not where we want it. We're not really crossing over just yet. We're not curling or anything like that. Whereas right here, a couple weeks ago, this would be a good spot where obviously we want to get long. So that's kind of telling us, hey, let's sit this out just for now. We want to see this pullback just look. So the RSI and the MACD is basically saying, hey, hold on a second. Your volume in here is also saying, wait a second here, because if we see a big drop on volume, we see a big green day on volume in here, that gives us a heads up of what to do for the next preview for the next trading session, depending on if that's going to gap up or down. Now, chart wise, what are we looking at? Well, I usually, most of the time I start with the daily, then I work back to the weekly, then kind of dig in again. So we're just going to start with a daily here. You can see that this level right here, 366, that's going to be key for us. That's going to be immediate support for us. And that is going to be our magic number in here going forward. I always like to pick solid numbers just straight across the board. Okay, we know that Monday's trading session opens up over 366, we're going to look for a hold. Under 366, we're going to look and see where the next support is going to be. So magic number 366 in here. We'll see what happens. Now, above 366, you have the 9-day EMA in here. And then you also have this area right here at the 380. So more or less a $20 jump in here for your next resistance. So if this 366 does hold, we gap up on Monday. SPY starts trading and going up and goes super, super green and takes Microsoft along with it. That is fine. But also if SPY starts to drop, we might have a bigger drop in Microsoft as well. Because remember, how did Microsoft trade with SPY Thursday? Well, SPY basically is a little bearish, more or less neutral, but Microsoft dipped. So that tells me that if SPY starts to take off, Microsoft will take off as well. But if SPY dips anymore, then Microsoft will dip even worse. So it looks like it's a little bit exaggerated compared to the SPY. That's what I would say, just overall, kind of what this chart is kind of telling me right now. Now, we gap down on Monday. Let's say we're below 66. We're going to bang our head up against this 366 for a little bit here. Where is that going to end us? Well, you have a little bit of support here at 360, but obviously we want to come down here to 351. So all in all, what we're looking at here on the daily chart is we're not on volume. RSI is not where we want it. And our MACD is not where we want it. So therefore, we're not going to get long here. We're going to watch this 366 magic number. And really, we want to get long here because why would we rather get long or why would we rather get short? Because we want to know for sure, are we oversold or are we overbought? That's going to tell us a key. That's going to give us a lot going into it. Now, next up, we have the news-based things that we need to worry about, right? Now, I know people like to play the news first, but a lot of times those news events are kind of sell the news, right? So that's why you can take the news event and you can kind of be a contrarian or you can kind of jump on the bandwagon with it. So that's why I always kind of look at the chart first, look at your RSI, your volume, your MACD, what the daily's telling you, and then we'll look at the news second. So news, what's our news? We have earnings coming up here in a couple of weeks, right? So that's the big news maker in here. So basically, we know that most of the time we're going to get a run into earnings. So we know in about a week from now, or a couple of weeks, we're going to have earnings, and we know that in the next couple of days that we could get a little pop in here just to kind of price in that earnings report. So, and really that goes either way. You could price into the down, you can price into the high. So really a pullback here to the 350s in the next couple of days, that's fine. Then it's time to get long. We can get a little pop into earnings, that's fine. Or we can kind of run up really quickly before earnings, and then we can take a drop down here before that earnings report actually happens a couple days prior. That would be also too. So there's a couple ways that we can play earnings runs. It depends on how quickly we're going to drop or how quickly we run up. But overall, normative, you want to see a nice slow going into earnings, and then a couple days prior kind of take off some gains in here and kind of price everything in. But more or less, it depends on how fast are we going to drop, and then how fast are we going to pop in here. So we have all that information in the back of our head now. Now we're going to scroll out here to the weekly, see what we see, and then we're going to dig back in to that daily chart. So weekly, what are we looking at? Obviously, 2 weeks here of huge volatility. You see that last trading session, low of 344, high of 390. So 50-point move on a $400 stock in here. That is massive. This past week, we had 366 and a high of 394 in here. So $30 move. So volatility contracting just a little bit in here, but we still have looks like we still have pretty good amount of volatility in here as well, because we do have earnings coming up. Now, we're going to look at our volume in here. You can see it's dropped off tremendously from last week's. That's because we also had a short week this week as well, right? So we're missing a trading session in here. And also, when you have short trading weeks, a lot of people go on vacation, so the volume is not really there. So that's always a thing to keep in mind as well. RSI, it looks like we're down here closer to being oversold, but we're still not below 30. We're up 37. But our MACD here, it looks like it's got it's pretty separated in here. So it looks like it could start to turn here and curl our direction sometime soon, but depends on how much further down we have to go. So that is what we're going to be looking for on the weekly chart. And then we also have to see where our big moving averages are. I like the 200, I like the 50 SMAs, and then I also like the 9-day EMA. It kind of gives you a good little heads up is actually where the stock is trading more relative to because the EMAs are weighted to that more recent date. So it kind of gives you a little bit better idea, but also those 50 and 200s, they give you the death and the golden crosses. So that's always good to be aware of as well. So on the weekly, again, price level still staying the same, 366 down here. Our lower trend line is going to be at that 350 mark, and looks like 351, 352. That's where we want to be. And also we still have that little hiccup there at 360 if we are below 366. So what the weekly is telling us in here now is, hey, we're ready. We're kind of waiting, but we need a little bit more confirmation here from this oversold before we can start to go. But more or less, we're kind of ready in here for a little run. So it looks like basically overall, I would say bearish to neutral in here on Microsoft just right now, because we want to get a little bit more of a pullback. We want to be down here at this lower trend line before we get a nice earnings run. So we're going to have to wait and see how the 366 mark, or how Microsoft handles the 366 mark here on Monday's trading session, where we're going to open at for this next weekly candle. So we know that information. We're going to go back to the daily. What does that say to our daily here? And we go, okay, yeah, you're right. We can go a little bit more, right? So the weekly RSI, obviously, it's not as oversold as we thought. We can wait a little bit longer in here for a little bit of pullback and then go. So we're going to say overall bearish to neutral just on that. On the charts, we have our news-based things coming up, right? So that's not if anything comes out, or any price movements or anything like that happens on Monday, as far as like predictions and things like that. But overall, just earnings is going to be our major news event that we're going to be looking our way up into, or up for. Now we're going to look at our net flows next. So net flow overall looks like it's a little bit to the put side. I would say mostly bearish, but a little bit of neutral in here. Our sentiment short-term intraday is going to be neutral, and our sentiment long-term is going to be neutral as well. And it looks like that all your highest volume in here is going to be on the puts. Obviously, that's kind of what happens when you get a big pullback throughout the day. So you can see a big red candle in here on the daily. Looks like all your volume was coming in on your options chains for your puts, and all your volume for your open interest was coming on your put side as well. So basically, before even looking at that, we kind of said, hey, bearish to neutral. And then we read what this information said for our net flow and things like that. And it said bearish to neutral as well. So that's always good to keep in mind. You had some activity here on the 450 puts as well. So that's something to keep in mind. Why were the 450 puts traded in January? Why was that such a big premium up here traded? It was like 2.5 million contracts traded up here, or I'm sorry, in premium, not contracts, but it was in the premium traded. It was 2.5 million. So the question is, why was it so far out, right? And why was there so much activity up there? So that is a question, but it was on the put side. So we have to keep that in mind as we're looking at this chart as well. Now, next up, first off, I got to say, for any of that information I just gave you as far as net flow and where all your volume was and your unusual actions activity and your open interest as well, and where that was, you can ask us that anytime in our Discord, and we'll provide that information for you. And we'll also give a breakdown of the chart, what we're seeing, and all that information. Everybody that's in our Discord, they know they can see that we do this basically 24/7, and every night we usually have one of the admins in here asking, hey, you need a chart flows request, anything like that. And then you guys always give us a list of things that we need to look out, or what you guys are looking for. And we always provide that information. So again, any of this information that I specifically for the net flows and things like that, we can provide that for you very easily. And like I said, 24/7 in there in our Discord service. So now that we have that information as well, chart, we have our news, we have our net flows. Now we're going to look at our options chain. So IV, we assume the IV contracted in here this past week because we had a $40 move last week. And then this previous trading session week on the short week, we had a $30 move high to low, right? So obviously overall IV contraction in there. That's usually how that happens, right? You get the bigger high to low, that's larger volatility, smaller high to low, that's smaller volatility. So what's our IV rank in here? Well, it's currently at 56. That is what we're looking at in here. So there's still relatively high IV. IV rank above 30 is going to be high. So anything above 30, you can sell premium here if you want to, or you can expect a big move. So, and you can expect your premiums to also correlate with that move by being very expensive. So your options are going to be more expensive in here relative to itself. So IV rank is 56. You have an expected move of right around a $12 move by this Friday, and next Friday, it's going to be a $23 move, and that's going to contain your earnings cycle. So all those options coming up in that 5/2 expiration are going to be more expensive, obviously, because that holds your earnings cycle in there. So the next question to ask, we're bearish to neutral on here, is if we do drop in here to around 360 or even 351, we want it to be at 351. That would kind of confirm things better for us. We want to get long there at the 360 or the 351. Where would we be buying options? Well, obviously, the first place you would go would be to a monthly expiration. That the farther out, the more time you can buy is where you want to go. And if you look at everything in here, your calls, if you go out to where's our delta at here? If you go 30 delta call, which is going to be 385, so you're about $20 away. $7, you go about $10 out. It's about $1,000. So that is where you first want to look at, is going to be those monthly expirations, because you're going to buy yourself as much time as possible. And also, if you need to kind of massage things out or try to protect yourself, you can sell something against it and still have time and enough juice in there to actually kind of limit your losses. Now, we're going to look at our 5/2 expiration really quick to see where we're trading at. And again, if you go about $10 out, you're looking at, it's only about $7. And if you're at the money, right around $1,000. So obviously it's cheaper, but it's still relatively expensive to itself because it contains that earnings cycle. Now, this Friday's expiration, we're going to look here, and it looks like if you go about $10 out, it's going to be about $2, and at the money is going to be $5. So obviously, that is going to be way cheaper, but you also only have 5 days with those options. So you have to be aware of that in there. Now, on the call side, let's just go out, we're going to go to next week's expiration, which is going to be that 5/2. We're going to look at our skew in here. We're trading at 367. You go around 15 points or down the opposite way, about 12 points, whichever way you're trading at. Let's see. That's going to be right around that $6 mark for your put side. And if you go the opposite way to the call side, you are basically, it looks like around $7 in there. So there's going to be skew in here to the call side, it looks like. And that is usually what we see when we are playing something with earnings coming up. So you have call skew in here. And that is normally what we see when we get a run into, or we're looking for some sort of run into earnings, or earnings is coming up. And why is that? Because that's where your risk is. Your risk is now to the upside, because they're hoping more or less news comes out, it's good. Therefore, the stock will go up. Whereas a normative skew, everybody's loading up stock and they're protecting themselves with the puts. Earnings, looking for a run up, and they're kind of protecting themselves, hedging themselves with the calls up here. So you're trying to kind of expect the stock to either come down a little bit from that run into earnings or kind of stay the same. So that is why your skew is that way on the call side. So, what would be overall our assumption here? Well, obviously, we want to kind of wait until 360 or 350, right? So, we want to get a pullback in here. But how far will we look out? We probably would go to the May expiration. That would be the safe place in here. Unless we get a nice rip down quickly to the 351s, then that's when we'll be looking at that 5-2 expiration or even the 425 expiration. And what we want to do in there is basically, depending on what our risk profile is, we want to snatch up some of those calls because even though they are quite expensive, we know we're going to get a decent move really quick. And we're just trying to day trade, get out of it, then that is what we want to do. We'd go in there and buy an at the money call down here, which would be right around that 50 delta. Really, we want to be in the money. Right around a 60 delta would be preferable, I guess. But if your risk profile is different, then obviously you can go out to maybe like a 30 delta or something like that. And then just kind of make a couple dollars off of a quick move in there. Now, if our assumption is telling us actually, we don't want to do that. We want to sell some premium. We still want to stay bearish to neutral, but overall, we think that we're going to stay below this 366 and we're just going to kind of milk it until earnings. And then we're going to be working our way down here to the 350 for a couple of days. Well, in that case, then we wouldn't actually say buy puts, even though the calls are more expensive, but we would actually be trying to sell some sort of spread in here. And what we would say is we would probably go out to that May expiration, and then we'd sell something there. So whenever you're selling something, you want to go as far out as possible, and you still want to have some of that theta to your help here. So you want time on your side, because that's the one thing in options trading that we cannot control. We can control everything else, but that incessant nature of time, it's always going to come, right? So we cannot stop time from ticking, right? So what we would do is probably we'd try to sell something like a 40 or 30 delta call spread in here. You can get it's not really a third of the width of the strikes, but you're close to it. Maybe it's a little more if you go to 30 delta. So maybe the 380 and a 385 call spread is what you'd be looking at. You can collect around $1.93 off that right now. So that is something that we would look at. Or also you can probably do an iron condor. And if you want to skew it to that call side just a little bit, you can collect around 373. So that is if you are selling the 45 delta, you're selling that 365, 36, and buying the 360 on the puts. You're selling the 380 and you're buying that 385 on the call side. That would collect around 373 in premium. And although that is pretty tight, you are still playing it to that call side in there, and you're sucking out that premium. And you are a little bit bearish to neutral in there. And actually, let me take that back. I don't like that. I think the 360, the 350 to the 355 would probably work better. And then you can actually bring this down to around 375, 380. So that would probably be a better if you were bearish to neutral. You can collect 352 on that. And that would put our delta actually in the negative by 1. So you still have that positive theta. Your delta actually be negative. That is more of a bearish to neutral trade in there. And then basically if you want to kind of skew it to the call side, you can come all the way up to at the money in here, which is going to be close to, on the put side, which is like 365, 360. And then that's when you can kind of work out to that 380 or 385. And you go, let's go 385, 390. You can collect around 342. So in this way, your delta in here is basically 0. So you still have flat delta neutral, but you're more or less, as time goes by, your delta is going to shift to the call side. So it's going to be more bullish. And that is where you could kind of play it to the bullish side. But for now, when you're trying to place this, it looks like your delta is going to be 0. So those are just some things that you could do here in Microsoft, and how to properly build an assumption. Obviously, what is this telling us right now? Overall, based on our net flow for the day, yesterday, bearish to neutral. We're looking at the chart in here, not really telling us anything. RSI, MACD is kind of telling us to wait on the daily. The weekly is kind of saying, it's coming soon. We would say bearish to neutral, wait for 360, wait for this 351 down here. That's how we would play this, because we know we have earnings coming up in a couple weeks. So we can take a couple days off of not playing this and just kind of waiting and see. The 366 is going to be our magic number in here. We're going to see if it does hold. Maybe a couple days you get a hold up here and it looks kind of shaky. It's not on some good volume. Then you know it's going to break down here, and then we can wait to get long here. Or if you're shaky on volume here and you think you want to get bearish, go ahead and buy a put down here. Boom, watch it come down to this lower trend line, and then you can get bullish here. However you want to play it. But again, overall, that is kind of how we build a narrative. Any of that information that I just gave you guys, as far as the net flows, the overall volume, where it's at to the put side, option open interest, where is it at? It's to the put side, or to the put side as well. Any of that information you can get ask us for in our Discord. The options premium, the IV rank in there, the expected moves. Even if you guys wanted to dabble into trying to sell spreads, sell iron condors, suck out some premium here and there, we can help you with that as well. So feel free to subscribe to our Discord service in there, and we can answer all those questions immediately for you. And like I said, it's basically 24/7 in there. So ask away. And especially if you're coming in with your own assumption, and maybe it's contrary to what we're saying, that's fine. You still have your own assumption. That is perfectly fine. It's your money. You're allowed to do that. And if you want to say, hey, I see you guys seeing this as bearish to neutral, but guess what? I want to get long here. I think that 366 will hold. Okay, well, all right. You want us to give you a bull put spread to kind of spread to sell out? Do you want us to tell you a call to buy? Because we'll tell you, okay, yeah, if you're bearish, go ahead and buy that 370 call, buy the 367.5 call. It's only $6-7. You want to sell a spread? Go out to that expiration for 5-2 and sell the 360 and buy the 350. You can collect $3. That's almost that's almost a third of the width of the strike. Go ahead. If you're bullish, you think 360 is going to hold, you think 366 is going to hold, that is fine. Go right ahead, suck out some of that volatility. We'll keep track of it for you. We'll look at that delta for you daily. We'll tell you the theta. We'll tell you how to adjust to that once it breaches your strike. Say if you're wrong and it goes down, we'll also tell you when to take profits if it keeps on going in your direction, and how to buy it back. That is fine. That is what we're here for. We want you guys to build a narrative. We're just kind of showing you overall what we look for overall in building a narrative and how we're coming up with these trades for you guys. And it's always good to know when to get into something and then when to just kind of sit out. So Microsoft overall, I would say personally, right here, we're going to sit it out. We're going to wait for 360. We're going to wait for 351. Then we know to get long. We're going to see how Monday opens, and then see how we react to this 366 mark, because we do have earnings coming up in a couple of weeks. All the net flow, everything else is saying bearish to neutral. Intraday, bearish to neutral. Long-term, bearish to neutral. A lot of action on the 450 puts for whatever reason. Keep that in mind. IV rank in here. IV rank got sucked out. We want volatility to come back in. And then our options prices are still relatively expensive. So we want more volatility. We want our options prices to get cheaper. Obviously, more volatility is not going to happen. But if we get volatility, then we can take advantage of those higher options prices. But if the volatility stays where it's at, then that can also help us in a different way as well, as far as like purchasing options. So all in all, hopefully this helps. I know I rambled there for a long time, but this is how you can properly build a narrative. And if you guys have any questions on anything I said in here whatsoever, even if you just want to try to help build an assumption or a narrative for another stock, please feel free to reach out to us. We will help you immediately. All right, guys, if you like this video, make sure to check us out on our social media. We also have a Discord server if you're interested, and you can find all of our socials in the description below.